Cool. So yes, the final panel. Thank you all for staying for us. Today we'll be discussing beyond CEX versus DEX and what the future of trading really looks like. The question is posed in quite a binary nature with CEX versus DEX. I think in this panel we'll explore all of a range of factors in between them, and probably in the end we'll fall somewhere in between the two extremities, rather than treating it so binary, more of a scale, looking at the different factors. So before we jump in, if my panelists could introduce themselves. David, we'll start with you and go left to right.
Hey everyone, thank you for hosting us today. So my name is David, so I'm coming from FreedX. So I'm one of the board members and the managing directors in FreedX. FreedX is a centralized exchange. I know many of you was going to be telling so why we need another centralized exchange again. So I guess we'll try to cover during this panel. And thank you everyone for joining and hosting.
Hi everyone, my name is Anton. I am co-founder of OneInch. I with my co-founder invented OneInch back into 2019. It was the very first DEX aggregator. So we just realized that blockchain contains like a tens of liquidity sources which can be utilized simultaneously to improve prices for takers. And nowadays we are aggregating like tens of thousands of liquidity sources, being smart contracts, to optimize rates. And this year we're also stepping into new area of liquidity provision, and yeah, we're gonna make it amazing. Thank you.
Hi everybody, my name is Matthew, co-founder and COO of GRVT, spelled GRVT. We are a perpetual decentralized exchange. Today, I think one of our main selling points that we're trying to do today is to create a very liquid market within the decentralized space. And in addition to that, we're also creating our product to become the best yield platform within DeFi. Now, what we're trying to do in addition to this is to just create a bunch of yield products for users to invest in, and so that we can build wealth with all of our users going forward into the next couple of years. So that's a little bit about the company. Yeah.
Hey guys, my name is Tika. I'm the director and the head of global institutional sales for KuCoin. So KuCoin, we are now serving like more than 41 million users over the world, being one of the like top tier global exchange. And for myself, I usually like supervise more on like institution business, from like market makers, HFTs, prop shops, OTC desks, family office, and asset allocators. So yeah, more than happy to be here today, and welcome to Connect later.
Cool, thank you all. A great panel on both sides. If I can start with you potentially, David, about some of the misconceptions about CEXs. Most people, I assume, in the room know what a centralized exchange is, but potentially you can go against some of the potential misconceptions, and then potentially touch also on any aspects of DEXs that interest you most.
Great, great question. And I think many people still talk about the trust, right? So because it's centralized, the world itself says that it's centralized, and you keep the data, keep the custody, the many parts of still like the processing and trading that happens in a centralized way. And many people still say like, if that's centralized, how can I trust you? So based on what I should trust you. And still, I think still the trust thing is being very loud about the things, but I will try just to continue saying that the trust is the main component where the people are lack of trust. And they want some guarantee how they're going to be doing that. And the recent things that happened, and many things, the collapses, of an exchanges, of many hacking that happened, gives additional layers of an exchanges and institutions, additionally to take an actions, such as like a proof of reserves, showing how their processes works, how they keep the liquidity, how the market making happens as well, etc. And you know, many exchanges as well try just to say that we are not using our market makers, but they use their market makers. Maybe that's a separate entity, etc. And that's again about the trust and about the transparency. One thing that I would like to mention as well here is the simplicity. You don't have to go to the terminology and the different types of the very difficult like areas to try to explain the whole population how that works, because they don't have to understand all this. They don't have to understand what's the market maker, how it works, etc. But you have to try to be very simple and you have to try just to pass that message as simple and transparent as you can, so that people can understand how that works and they feel safe.
And Tika, I guess I can come to you also on this one as a KuCoin as a centralized exchange with some decentralized products. How do you think about the misconception of CEXs, and also potentially given that KuCoin has some decentralized products, wallet, etc. Are there any sort of elements of DEXs that interest you most, that you think KuCoin is looking at in the future?
Well, I think first of all, for myself, I actually from a traditional background as well. So I've been spending many years in like stocks, equities, IPO markets in Hong Kong and US. So I think when you look back into the histories, most of the major like exchanges are actually centralized, right? So like crypto exchange being centralized is actually not something uncommon. Well, when we look back into the crypto history, the crypto industry in the past 10 years times, we cannot deny that like centralized exchange has always been the center of the development of the crypto ecosystem. But yes, I agree with what like David just mentioned, like trust issue, because we have been seeing a lot of failure in the past 5 to 10 years time. A lot of like centralized exchanges, they failed. But I don't think this should be centralized exchanges shouldn't be like accused as a single point of failure of the whole centralized exchange system. In fact, centralized exchanges like us, I mean like for all the top tier exchanges, we have been investing heavily in securities. Like in, let's say we have third-party audits, so all those like multi-factors authentications, like dedicated like cold storage for clients' access. So what we have been doing is to build the trust and security for the crypto ecosystem. So, but like people like will always say that, oh, because you're centralized, so you're not transparent enough. But when you look into like traditional stock exchanges, are they transparent enough? But I mean, if you compare in that sense, actually crypto exchanges, centralized exchanges, like actually have been like much more transparent compared to those traditional exchanges. So, and speaking of DEX, actually, I don't think, like, I'm a little bit against of the topic of CEX versus DEX, because I don't think we are actually on the opposite side. In fact, I do strongly believe that there are a lot of things that CEX can learn from DEX. That's also the reason why centralized exchanges are now like investing into DEX and developing DEX as well. And because what we want to do is to build the ecosystem together. So, and there are a lot of things to learn. For example, like AML, liquidity pools. These are also very interesting, new, innovative protocols and products that we do not have before. So I think that actually, like with CEX and DEX together, we are actually trying to build the ecosystem even better.
And if I can jump to you potentially, Anton, touching on the security piece. Obviously, centralized exchanges have custodial risk and a trust element. And DEXs potentially have a smart contract risk. How do you weigh up these two risks for users?
Yeah, that's actually what I wanted to say, that centralized exchanges and decentralized exchanges are providing users a different user experience, and they also provide exposure to a different risks. For centralized exchanges, it's a custody risk. It's not obviously that hackers can steal your money. Sometimes exchanges can steal your money. Sometimes exchanges could lock your money and you would spend days, weeks, or months on providing documents, and this is also a risk. For decentralized exchanges, they introduce you to a different set of risks. The opposite one is self-custody. It's also a risk. When you own your assets in a self-custody, it's also a risk, but it's a different risk. You have to understand that you should not share your seed phrases. You should keep your keys private on hardware wallets to not let viruses steal it, or you should probably use multi-sig solutions. It depends on the degree of sophistication of the users and the amounts of money they are operating. But the thing is that those two different approaches are introducing two different sets of risks. It's not like a direct competition where there will be like one clear winner. I think we will always have a spectrum. And I agree what Mika said about the largest exchanges. There are still centralized ones, but this is not for long. I believe this would be changing in the next 5 to 10 years. We saw that decentralized exchanges volumes reached like tens of percentages of centralized exchange volumes. And I think with the next generation of DeFi protocols, it could exceed and flip centralized exchanges. But this does not mean that centralized exchanges would die. Not necessarily, because some set of users would be more comfortable with this set of risks instead of decentralized exchanges set of risks.
Matthew, can I bring you in on the risk aspect between the two and how you feel about this one?
Yeah, of course. I guess from my point, I guess the only DEX on the panel today, just to actually talk about it from a different point of view, right? What we actually have is on centralized exchanges, you have off-chain order book, off-chain settlement, and then independent audits and independent reviews, right? Whereas on a DEX, we basically utilize a lot of the current infrastructure that our entire industry has put together, which is the blockchain itself as the fundamental layer for settlement. Now, when you break it down in that aspect, you have the aspect of a decent, let's say, off-chain order book, but on-chain settlement, allowing users to have the entire element of self-custody, while at the same time you can still keep a lot of the security that you have from both centralized exchanges as well as decentralized exchanges. Now, what does this mean, right? On us at Gravity, we allow users to create a username, password, and then connect their private key into the wallet itself, but also to reinforce that whole architecture with an OTP. Right? This traditional structure allows helps to reduce a lot of the fraud and theft that we're seeing today, right? So actually for us, we had once actually case study where one user actually had their wallet compromised. And as they traded on many other perp dexes, but because of the traditional infrastructure that we had from centralized exchanges as well, Gravity was one of the very few places, if not the only one, that allowed the user to not have their funds fully drained. So that's on the aspect of the security side. In light of the trading side, which I think you'll get into, maybe I'll just hold off.
No, go for it. Yeah.
Yeah, I guess then that leads us into the natural segue of the trading experience, right? I think for centralized exchanges as well as decentralized exchanges, centralized exchanges already have the ability to have the throughput of hundreds of thousands of transactions per second, right? At single-digit latency, right? This allows a lot of the HFTs, institutional traders, to come on and to trade with very high frequency on the exchange itself, whereby over the past few years as well, we are seeing a lot of developments and a lot of progression in the technology that we're using for decentralized exchanges. Because we are still able to blend in the aspect of off-chain matching, but on-chain settlement, you really get the best of both worlds by still having the same order book infrastructure and throughput that you have on a centralized exchange, but you still have the security and the settlement and the aspect of your keys, your crypto, and under the custody and the settlement side. So I think that's really where I think the direction is really heading towards, as what Anton also mentioned. It is a technology that allows us to bring in the best of both worlds and allows users to own their own assets.
Can I bring you in on that, Anton? Like your thoughts on how DEXs previously or are known for lower speed, lower price execution, and how are they getting closer to CEXs? Should they be implementing anything else to start competing or get closer in terms of this latency, price execution time?
Oh, actually, that's a good question, because I think I would share my opinion on high-frequency trading. From my point of view, it's not primary product of economy and of exchanges. It's a secondary one in terms of it was possible on some exchanges, on centralized ones, on traditional ones, but this is not something what gives like a core value to economy at all. And the thing that we do not have any high-frequency trading on decentralized exchanges is good enough for everyone who is using them, except high-frequency traders. I mean, some layer 2s, some CEXs, some DEXs would try to bring this experience to them, but I don't see any value behind them. I mean, I would better prioritize capital efficiency for liquidity providers, efficiency for takers, for makers, but not for those who are like a secondary product of the technical implementations, I would say. So, yeah, I think that decentralized exchanges with the better approaches, with the protocols for higher capital efficiency, like for example, what OneInch announced is a shared and unlocked liquidity layer. I think this would dramatically increase capital efficiency for liquidity providers who are passive market makers. And this would make whole market more efficient for takers also. And that's how we will see DEXs would exceed CEXs in volumes, in user base, in transaction-wise. But we will not see any high-frequency trading dominating in that space, most likely. So, yeah.
And David, if I can bring you in from a centralized point of view, when you look at sort of the growth of DEXs and potentially like a user base which is more educated, slightly more technical, growing, how do centralized exchanges keep pace with the wants of the users as they become more technically enabled?
Correct. As Tika mentioned as well, so the people are, like even the centralized exchanges are investing a lot in the decentralized exchanges, and on a long term, there should be like a collaboration rather than it's a fight who's going to be the best. So I'm going to be investing into the centralized exchange, or I'm going to be the customer of decentralized exchange. But it will be like a unification. It will try just to be unified as much as possible, and it will be for the best of the clients. Just to bring one of the cases as well, the world population is not very well crypto adopted. Even if we know that there are many crypto adopted like nations or like a people, etc. But in general, if we compare, the majority is not crypto adopted. I have even many friends or like an elder friends who just come and say, like these seed phrases, I may lose it. I can't understand how the automated market makers work. For sure, they don't know even the term is like, they just try to explain with their hands and the legs, like trying just to say how it works. But this is very complex for the majority of the people. So I still keep shouting about that the people need simplicity. Regardless of the technology in the tech stack and how it's being distributed to the end users, it will be for DEX or for the CEX, they will work together just to provide the simplicity to the end user so they will feel comfortable of using that.
And if I can bring in the regulatory side of things, potentially, centralized exchanges are a little bit easier for regulators to grasp and to regulate. Potentially, Tika, I can bring you in on this. Like, how do you see the DEX element being regulated in comparison to the centralized element?
I would say it would be very difficult. Like it's really difficult for like regulators to really regulate those DEXs compared to CEX, right? Just especially, when we look into the current context of the crypto market. So in the past 1.5 year time, we are seeing the crypto bull run majorly like leading by the institution adoptions. Well, we're seeing like big institutions like BlackRock, Fidelities, and also the sovereign funds, governments, DEX buying in those buying crypto as assets and making like Bitcoin, Ethereum, all those like major coins as a new asset class. So they need a really safe and secure platform for them to do these transaction and executions. And like most importantly, if something happens, who can I sue, right? So of course, everyone doesn't want to have anything happen, but at least if something happens, who shall I sue? So I think this is a really important thing that DEX has to overcome in order to grab the eyeball from more institutional players. As we're seeing, like this bull run, a lot of institutional players is coming in, but it's not an end. We are still seeing more and more like asset managers, family offices, while they used to only be able to invest into, let's say, IBIT, Bitcoin ETFs. But in the past half-year time, in the coming half-year time, what they have been doing is to updating their like investment mandate for their clients to add in cryptocurrency inclusive. So by that time, we are seeing that more, at least in Asia, more and more like family offices and asset managers, they are allowed to hold crypto directly and hold Bitcoin directly. But at that time, so for this type of like clients, this type of institutions, they really care more about whether you are regulated, whether you have those licenses. So that's why centralized exchange nowadays are working very closely with regulators to obtain several licenses. Like KuCoin, we just got the license in Australia. We have launched KuCoin Australia Live. We also obtained the MiCA license recently. So this is I'll not say like impossible, but in a foreseeable futures, regulators are still busy with managing and regulating CEX rather than DEX.
And Matthew, on that point, do you see sort of like a necessary creep from DEXs and those on the decentralized side towards what is slightly more centralized and having to potentially give up some of the philosophical points which they started with just to sort of survive the regulatory scrutiny?
Yeah, no, I think on that question, it's a really good question because I think it just puts into perspectives that there are many different flavors, right? I think Anton previously mentioned, like there are different types of people that want different things. There's a HFT trader, there's a more retail trader. You might not need the most complex products for everybody, right? But I think in light of this, we're always going to see segmentation and like a spectrum of types of DEXs that are coming out. To actually touch firstly on the regulatory point is regulation from how I see it is a means for governments to regulate what type of activities and where money is flowing from, right? You're thinking about it from the point of view of as a regulator like AML risk, illegal activity. Are there means for you to stop a lot of these illegal activity, and are you doing the right sanction checks to appropriately make sure that this entire trading venue or venue that you are dealing with is a bunch of is made out of clients that meet the regulatory requirements of, hey, they've earned the money the right way, and this is where they come in from. I think for us to touch on that point first, as a DEX, most DEXs are always settled on chain, which allows users or like the DEX itself, all regulators to actually do KYT, know your transaction, and know your address, right? And knowing which wallets come in. I think the likes of other, crypto surveillance counterparts allows back tracing up to the inception of the token itself, and forward tracing all the way to where the tokens might eventually end up to. So you actually are able to track the entire value transfer on chain, right? On centralized exchanges or in banks, you can still do that through the travel requirements that you still face. But that's where a lot of requirements and effort is required on the compliance side of things. But in terms of to go to the second point, which is touching a little bit more onto your question, where will DEXs really end up to, right? I think you can go to the full decentralized route, where you can see, I think on the spectrum is a little bit more like hyperliquid, lighter. And then on our side, as for us, we're Gravity, we run a private, basically a privacy DEX, right? So you're able to trade, all your settlements are still able to be, all your open positions are still available, and for you to hold those open positions safely, but nobody else can actually see those positions until you actually settle. So that's how we maintain settlement finality, so that whenever I close my positions, that's only when that my profit or loss gets printed on chain. I think that this is a balance, right? People want full privacy like us, or they can go full decentralized, full transparency like on hyperliquid or lighter. So there are many different flavors. People can choose and decide what they want to trade on.
And Anton, you've been in the space for a number of years, so I assume you've already started to see sort of a creep from potentially those hardline philosophies that those people getting into decentralized space started with, and some creep towards centralization, at least some elements of it. Do you think it's going to continue this way? Have we sort of found a happy medium yet, or are those like DEXs, decentralized protocols, going to keep slightly shifting?
I think that we will see actually tens of different approaches to regulate DeFi from hundreds of countries. And I'm glad that we have so many opportunities to explore which approaches are working better than others, because some countries will start first, some will join later, and they would borrow something what would work better. And I would like to highlight that crypto is actually consists of like two parts. One of them is technology itself, which is beneficial for traditional markets in some ways. They could use it, but it is also one of the hugest liquidity hubs. So it's liquidity hub of liquidity, which is pretty active. It's actively seeking for opportunities. It's working with risk rewards, and this is something what still giving like a great benefits. When some country is making regulation in a hard way and trying to regulate it with KYC and everything else, they would clearly benefit from technology, but not from merging with this decentralized finance economy. But when some countries regulate it in a soft way to let their economy work with this economy more closely, they would benefit from this, because more countries are connecting their economies to crypto economy. They are connecting their economies to each other over the crypto DeFi economy. And this is actually the basic principle of economy. Collaboration leads to prosperity. So this will be mutually beneficial for everyone. But in DeFi, we should not worry that much in general about KYC and other things, because DeFi is financial freedom. And this is freedom to let subset of users and subset of protocols to play with self-restrictions. I mean, DeFi should not prevent other participants to use restricted versions of the same software. It makes no sense completely. I don't believe that we will see whole DeFi denied, deprecated in all possible countries. I mean, no way. And the most those countries who would regulate it in a soft way, they would actually benefit economically. So yeah, and I think that at the end we will see like a full spectrum of everything. There will be CEXs, DEXs, regulated, non-regulated, soft regulation, hard regulation. The thing is that countries decide on their own on which side of this spectrum they are, and users are also be able to select on which lowest subset of spectrum they are, at least until they can avoid some regulations with VPNs or any other like technical measurements.
And you've sort of focused in a large part through 1inch on combating fragmentation, both on the taker side and now liquidity side. Is it possible that there'll be country fragmentation as regulation in certain countries starts to lock funds in that country and it becomes more difficult for this?
I think it's possible for every project that if some countries are trying to regulate DeFi, they have to do this until they will have consequences, until it's anonymous team and they don't afraid anything. So yeah, I mean, they will try as hard as possible, but they're not crazy guys. I mean, I don't want to be in jail also. So users have to solve these problems on their own. They could try to avoid those tracking of countries. They could try prevent being from different countries, or they could actually move to different country if they wish. So I mean, yeah.
Yeah. And David, to bring you in from a centralized point of view, what are you looking for when you're looking at the regulatory side of things and how to work with regulators to make sure that the market you are in as a centralized exchange is that there's some give and take in regulation?
Yeah, that's a good question. So many people still think that the regulator is an enemy. It's a police that you are trying to be escaped, but that's not. I still understand that there are many like regulators that are very bureaucratic. They go into the politics a lot and they try just to make your life very difficult. But what we have faced as well and what we have understood, and like we have granted and got our like a license in El Salvador, and we're having a quite good relationship with the government as well. So it's not about the bribe, it's not about just some having like a privilege, but it's about like a relationship. because end of the day, everyone is a human. So if you try to keep and understand what they demand, and if you're trying to keep all these requirements in order to make the client's life easy, I guess everyone is being happy on this type of like a communication, this type of like a relationship. So taking that into consideration, I think wherever you enter, any market you enter, it's very important to go into the details and understand what is demanded from a regulator. But at the same time, what I have understood as well, you always have to challenge the regulator. It's not about that, oh great, so the regulator is asking me that I have to do the first, second, and the third point. That's fine, I still have to keep it because that has been there for a reason. But if there is any reason that you can try to challenge and make it better, that's where you come in, and when you are trying to bring your experience, your team experience, in order to make it better. Because end of the day, the whole regulation is for the end users and for the clients.
And if I can jump onto the liquidity point, you've touched on it a couple of times, Anton. The fragmentation of liquidity on the decentralized side is potentially a roadblock to progress and to it sort of catching up with its centralized counterpart and growing its user base. So how can DEXs sort of combat this fragmentation of liquidity and potential inefficiency that you've also touched on?
Yeah, back into 2019, we invented the very first DEX aggregation. So we saw that liquidity is highly fragmented. And we were asked multiple times by different investors when we raised rounds, what do we think would happen with fragmentation? And we answered, for sure it will grow. We're building DEX aggregator. Because they were still thinking, if there is any chance that one huge protocol would absorb most of the liquidity, like 90%, and there would be no reason to aggregate anything. But yeah, what we see like 6 years later, we see liquidity is highly fragmented. And with our new approach, which is shared and unlocked liquidity, it will be fragmented even further. We will have tens, hundreds of times higher fragmentation. If nowadays we track tens of thousands of liquidity sources, I think in 1-2 years we will track millions of liquidity sources. Fragmentation will go crazy, but that's how efficient market looks like actually. It would be more efficient for liquidity providers, makers, and yeah, takers, DEX aggregators, solvers, networks. They are already solving taker fragmentation, but they have to do more job, yes, for sure, but market will become much more efficient for both of the players.
Matthew, can I bring you in on the liquidity side of things, how DEX is are dealing with this liquidity issue that they face?
Yeah, so I think on the aspect of liquidity, sometimes it's actually not really a bad thing. If there's differentiation in prices between DEXs versus CEXs, actually there's a lot of opportunity, right? There's opportunity for arbitrage for retail to come in to do the arbitrage, for institutional to do the arbitrage. The fact is, I think we have created the current network and ecosystem around the DeFi space is very, very healthy. There are a lot of people that are very, very smart. They've created their own APIs, and they can help to they might come in to take advantage of price differentiations and differences between different types of movements and price discovery within DEXs themselves. But in addition to that, I think the space has been growing and it's been maturing. Even for ourselves, right? We are a DEX. Typically we see between 8 to 12 BTC top of book on our exchange alone, right? So that's about 800,000 to 1.2 mil at the top of book for us, and that's on a spread that between a 10-cent spread on BTC alone, so there's under 1 bip, right? So a lot of times you can see a lot of progress and a lot of more developments that come. Yes, well, it's still a nascent and still a growing industry, but there's a lot of opportunity that comes in over here.
And as we're sort of into the last sort of section, I guess, Tika, I can bring you in here. What do you think your users are valuing most now, and has that is that changing as sort of education crypto grows? Are they valuing sort of self-custody more? Are they valuing speed? What are people looking at now?
I think from my perspective, it really depends on which type of users are you like specifically like referring to. So retail users, pro traders, and institution players, they all have like different preferences. Let's say from retail side, like what they are looking for is a easy a user friendly interface, a really good nice UI UX, and also where they can find true alpha. I mean like look back like we used to have a lot of projects going like 5x 10x 100x. So I mean where the wealth effect is, and then those people, I mean those retail users will be more keen to trade on those platforms and those places. And that's why I mean like there is a significant increment on the usage of DEX, because they are offering a very like easy user friendly platform, and also for with giving a very high leverage on perpetuals, right? So, like, because we are always seeing that like crypto was just like a casino, but while we are now seeing that more pro traders coming in and institution players coming in, so the crypto market should no longer be just just a casino for people to gamble, but for institution players, they might not be chasing like absolute alpha like 100x, 50x, but they would like to like chase for like steady returns, and most importantly security. So that's why before they engage to a platform, engage to a service provider, so they do a lot of due diligence on the company histories, the firm's histories, and also whether you have any like court cases. And we usually receive clients giving out like 20 pages of the DDQs for us to fill out. So in order to get past the compliance department. So I think these are quite the behavior and the selections of institution and retail players are quite different. And for institution, I think in the coming few years' time, in the coming maybe half to 2 years' time, so they will be looking more into, self-custody is definitely a way that they will choose. But I am seeing that more and more of them they will still engage with centralized exchanges, but they will look for centralized exchanges that will give them alternative solutions on custodian services. For example, like third-party custodian services that KuCoin, we are also like partnering with some of the custodian firms in order to carry out such kind of collaboration. Because for institutions' perspective, it's more about like diversifying your risk. So they will never trade on single platform all alone, putting all their eggs in one basket. And even though if they are trading on multiple venues, different centralized exchanges, they will also prefer to have each exchanges, I can further diversify my trading risk and custodial risk to different parties. So it's all about, so we can never eliminate all the risks. So whatever you do, there are risks with it. So no matter, it's not just for the crypto market, but also for the TradFi market as well. So most importantly is how we build the infrastructure and solution over them alternatives to adapt into the market.
Do you see the emergence of crypto super app? Because you sort of pointing to the fact that you're able to service sort of from beginning as like onboarding a new user to high frequency traders to institutions. Do you see sort of like a consolidation of exchanges, DEXs into super apps? Being KuCoin being one of the largest centralized exchanges, potentially you might have some insight here.
Yeah, I think yes, super app is a really good term to position what centralized exchange are trying to do. Because what we are doing is just not for like we have like sport, perps, like earn. We have different kinds of. Also have launch pads. And in terms of like ecosystem itself, we also do our venture arms. We also do a lot of educational work. I think eventually yes, and we are also seeing more and more like migrations, and also like let's say M&A in the futures. We have more like mergers between smaller exchange or maybe larger exchange and smaller exchange, maybe due to like different compliance and regulatory like requirements. So yeah, I think that definitely is how centralized exchange are moving. It's just like when you look into the stock market, actually there are not that many stock exchanges in one region. So yeah, that could be the future, I believe.
Okay, so we have sort of five-ish minutes left. I will give you each sort of 1 minute to put your vision forward for what the future of trading looks like.
I will start first. So I think the key is the ecosystem, and every player that enters the game, it can be the DEX, it can be CEX, or it can be any DeFi protocol or anyone, they are trying to make the game better. So whenever you bring the new features, regardless you are in a CEX, DEX, or any other like an institution, you are trying to make the things better and challenge your colleagues and the peers. So whoever it is, you can call it competitor, but I never call it a competitor. We learn from each other. We try just to not to keep the secrets type of the thing, because you make like that the ecosystem and the whole industry better. So I think, as you mentioned, there is going to be like a super app. It doesn't matter how you call that, but there is going to be like a unification that goes even to liquidity, because the current liquidity isn't being used very efficiently, right? So between the CEXs, the DEXs, etc., there are many pools, there are many like liquidity, etc., and the people go and try just to enter into the different slippage. They just get not the best fees, they are not getting the best liquidity, etc., because again that goes to less centralization and the less ecosystem and the team playing, I would say, like this.
Yeah, as far as you can see, I'm living a little bit in the future. I'm always talking what would happen in a few years, 3, 5, 10 years. Yeah, I'm very optimistic about this because I see DeFi from technical point of view, and those amazing features of being composable, being transparent, being highly liquid is something what actually inspires me. And I think that we will see DeFi renaissance. We will see how DeFi would become far more efficient than traditional markets because of its nature, of its standards and composability and higher availability. So yeah.
Yeah, so for me, I would say I actually break it down into 2 points. The first one is the future is what type of products you offer, right? So for us in DeFi, we already have perpetual crypto and type products, right? So you're able to trade, Bitcoin, Ethereum, Hype, Solana, any of those products available. I think we're leaning towards and going towards a future where we are seeing eventually FX going on chain. We're going to see commodities go on chain like gold. And then eventually the final state will probably be something like equities as well, right? So as long as you can find an aggregation of all these type of products in one place, you're able to create wealth, right? When crypto starts to pump, people will come and trade crypto. When that, the hype dies around that, then people might go over to FX, they might go over to commodities, they might go over to equities. And that's where you'll see the diversification of all these products come into play. And on my second point is, with all these products, you often will have the aspect of wealth creation. Because you have an aggregation of all these products, you can bring in institutions that can come into level the play to offer some of these services. And most of the time, what I always say is, DeFi or the crypto itself is a great equalizer. It allows retail users such as ourselves to come in to invest and to gain access into other types of institutional type of products. So for us at Gravity, we've created the aspect of vaults and investment strategies, whereby we're able to have give out, institutional type of yield for market making and delta neutral type strategies, giving out, about 30% APR at a 7.6 Sharpe ratio. Extremely high from what it is. And as you go about from different type of products, from crypto to FX to commodities to equities, if you have these sort of products available, institutions can make money, retail can make money, and everybody creates wealth together. So that's how I'll answer the question.
My point with my view would be like we are actually at the intersection of between Web2 and Web3, TradFi and Web3 and Web3 world. And what we are seeing is that there will be more opportunities for the Web3 industry as we getting closer to the TradFi ecosystem and the TradFi system itself. So we are now seeing more and more, because like the crypto native world is very saturated already at this moment. So we are looking into, and while a lot of TradFi old money, they are like trying to tap into the Web3 world and to understand more, because like back in 5 years ago, everyone is saying that crypto is scam. But now, because the fundamental of crypto is actually technology, where a lot of people from Wall Street might not be that familiar in blockchain's technology itself. So I'm seeing that there are more and more integration. Well, we are seeing the migration between Web 2 and Web 3. So crypto native firms, we are now learning the system of the traditional finance well, while using our advantages and what we are good at in technologies, building up like different protocols and products to suit in their appetite. And what I'm saying is that in the coming 1.5 years, more and more institutions will be coming in, which is good because the current crypto trading market is full of, I would say, mostly are from like market makers, HFTs. But this kind of asset managers, family office coming in, they are taking positions. So I believe this is much more healthier to the overall crypto market, and in generally, like it's actually helping the ecosystem, the industry to grow.
Perfect. That's all we have time for. Hopefully it was useful, and the framing of the question, we got to a conclusion or some form of conclusion. But yeah, I think the binary nature of CEX versus DEX, we've kind of kicked that to the side and shown the spectrum that it falls on. And so it's up to you as the user what works for you, what you're trying to get from it, and finding the place on that spectrum where is most comfortable for you. But thank you to each of the panelists. If you want to speak to them more, try and find them in the corridors, grab them. But I think that was the last panel for today. So thank you all.